Thank you for joining us for another episode of Real Estate Chat with ESV Olalekan Aboderin. This is a publication of REST, otherwise known as Real Estate Services and Transaction. This is a subsidiary of Real Academy Limited, a real estate, or should I say, a professional real estate development center here in Lagos, Nigeria. In the house, as always, we have ESV Olalekan Aboderin. He is the lead advisor of Olalekan Aboderin Consulting, a firm of estate surveyors and valuers, and is also the director of studies of Real Academy Limited. Thank you, sir, for joining us for another episode.
It's my pleasure, viewers. Thank you for being part of the show.
All right, thank you, sir. So we're still on the, like what we've been doing for the last 4 weeks now, buying a mortgage property. We've talked a lot about what the mortgage property is, processes involved in buying property under legal mortgage from a mortgagee and a mortgagor. We've discussed a lot of things, documents to be obtained, etc., etc. So, but for today, we're going to focus on something that's also very important. The processes required in buying property under equitable mortgage from the mortgagor. So on that note, we are going to start from there.
Okay, thank you.
Yes, sir.
Yes, incidentally, you see, buying properties under mortgage, there are different angles to it. And that's why I think our discussions are being, so extensive to ensure that viewers actually have a good take-home and can conclude transactions on mortgaged property without fear. In this case, if it's under equitable mortgage implies that the mortgagee has not actually perfected the deed of mortgage. That is, has not fulfilled the statutory requirements of obtaining governor's or minister's consent on the deed of mortgage. And by so doing, it means the interest of the mortgagee, that is the bank, has not been known to the government, cannot be verified or seen in the ministry, in the land registry. And on that account, for such a case, conducting search on the property, for example, that encumbrances will not reflect. It will not reflect. So where a mortgagor is to sell such a property, as I always emphasize, the first aspect is the due diligence regarding the title of the property itself. In this case, the mortgagor, don't forget, is the owner of the property. Chances are that he will not even disclose that there is a mortgage on the property. So there are a lot of, processes that must be done. The first part, let's consider where the mortgagor is so disclosive enough. He's able to disclose without any fear or favor that the property is under mortgage with a bank and it now wants to sell. Where that happens, after the due diligence on the property, which will not show that there is mortgage, the process will require having meeting with the bank at the instance of the mortgagor. There will be need to confirm the level of the indebtedness. I had an experience in the past where the guy who was to sell a property under equitable mortgage. For example, let's say he wants to sell a property worth 50 million. But getting to the bank, in that kind of a meeting, the disclosure was that his loan exposure was far more than 50 million. Say he was having about 80 million. Buyer should not buy such a property. Because even upon paying 50 million, the bank will not still let loose the title to that property. He has not been able to redeem that mortgage. So there is need to confirm the level of the indebtedness to be sure that paying for the property will neutralize, will pay off, will redeem that indebtedness, and therefore the title can be released. Now, in this case, it will be at the instance of the bank. Because, for example, yes, another process, instead of having meeting with the bank, is for the seller, that's the mortgagor, to obtain a statement of affairs on his account from the bank and present it to the buyer. But I emphasize, it's safer for the bank, for the buyer to call for, to insist that the mortgagor should have meeting with his bank at their instance. so that they'll be able to see through the state of things to be sure that when payment is made, the property will be free. Now, the second thing about that is that they need to determine payment modalities. Now, that property is not under legal mortgage, but the original document is still with the bank. And the bank will still reserve right to go and process the consent and filing for legal mortgage. So, the payment modalities will be such that the amount going to the bank to get the property free of mortgage will be the first part to be paid. Then the document will be released based on escrow agreement. We said that when it was under legal mortgage the other time, where a mortgagor is selling. It's the same thing here. There should be escrow agreement to tie the hands of the bank into agreeing that it's going to release, upon payment, it's going to release the document. I did such a transaction before, one transaction in somewhere in a small GRA here. And is under equitable mortgage. And when we got to the bank, we discussed, they have agreed on terms and all other things. They actually expected us to pay until we insisted that they have to release the title to our clients upon payment. Then the situation changed. It took us another 3 days before all those issues were resolved. And they now agreed to do. And we didn't do escrow agreement in that circumstance, but a letter, the seller, who is the mortgagor, who is to sell now, issued a letter to the bank to that effect that they should release. It gave standing instruction that they should release the document to the buyer upon receiving the value for the loan. So that was done. What I'm saying in essence is that because of that condition that we put to the bank felt, it put them on their toes. They felt something, there is something that they might not be able to answer immediately. And we have to have series of meetings for about 3 days. So that means an important aspect of this transaction. There must be basis for the bank to release that property, the title of the property, to the buyer. And the risk is high, where the buyer allows that property to be released to the seller. If it's a fraudulent seller, he will hold the buyer at ransom, expect higher bidder, and then refund the buyer on that best scenario, right? So we have to be very, very careful to ensure that that is done. So then final payment could now go to the seller, that's the mortgagor now. Now, there will be need for escrow agreement. Don't forget, we discussed escrow agreement in 1 or 2 episodes ago. Now, as there will be need for escrow agreement, that escrow agreement will tie the bank, this buyer, and the seller. Yeah. If escrow agreement could not be issued, then the mortgagor, who is the seller, should give standing instruction at the instance of the buyer, that is copying the buyer, that the bank should release the document, and the bank should equally agree to that. So then it's safe to go ahead, because bank is expected to be of integrity. They have given their words. They are not expected to go back. So now, but the best option is that agreement. Okay. Now, apart from that, there will be need for contract of sales, because there will be pending obligations in this case. So the processes will require that contract of sales. In this case, it's the mortgagor that is selling, so there's no much challenges. And it's the mortgagor that will now execute all necessary documents in that regard, where the transaction is consummated. Now, more importantly, the indebtedness must be confirmed. Bank must be brought into this transaction either by way of escrow agreement or by agreement between the bank and the customer. Because the fact here is this: bank does not know you as far as their customer relationship is concerned, as far as the customer's account is concerned. They'll just tell you that you are an unknown person as a buyer, if this situation is not addressed with tripartite meeting and maybe a tripartite agreement in form of escrow agreement, or communication between the seller, who is the mortgagor, and the bank, with agreement that the document should be released to the buyer upon receiving the payment, pay off the loan. That is very, very important. And what we want to achieve there is that paying off part of the money for the property to pay off the loan by the buyer, then the buyer should not be at the mercy of the seller again to receive the original documents. Okay.
Yeah, well said, sir. Now, still talking about this but a process involved in buying properties under equitable mortgage from the mortgagee. So, is there any difference when it's from the mortgagee? No, we just talked about the mortgagor. So, is there any difference when it comes
Okay,
to the
when
mortgagee?
to buy from the mortgagee? Yes, it's just a little difference.
Okay.
The difference now, you know, in this situation, is not the mortgagee. That is the bank that wants to sell.
That's correct.
Where it is equitable mortgage, bank cannot exercise power of sales because they don't have right to transfer.
That's correct.
They have not registered their interest, else they cannot alienate. They can't sign document that will effectively transfer right to the buyer.
That's correct.
So given that, they need the mortgagor.
Okay.
The bank will need the mortgagor to come in now.
Yes.
Necessarily, because that mortgagor will be the one to execute all transaction documents, deed of assignment, transfer form, and what have you.
Okay.
Right? Okay. So, given that, there will be need for the bank to bring the mortgagor into it.
Okay.
There will be need for the mortgagor to consent to the transaction. There will be need for the mortgagor to equally agree to execute all documents in his favor, in the favor of the buyer. So, in the light of that too, escrow agreement is important. All other conditions here will flow. In the case of a bank wanting to sell, they need to confirm the level of indebtedness is not important here. As the need to confirm the consent of the mortgagor to sell and to sign all transfer documents in favor of the buyer. So to be able to do that, in that circumstance, it's very, very dangerous to even do this agreement in form of letter. It's better in terms of escrow agreement. If the mortgagor cannot be made, mortgagor cannot be made to pre-sign all those documents and give them to the bank, then it should sign. It should be brought into escrow agreement such that it will sign for that pending obligation that he is going to execute. Okay. Right? And it will now execute that in favor of the buyer, not the bank now. Okay. In favor of the buyer. Okay. That signing of deed of assignment, signing of power of attorney where required, signing of transfer form or issuance of transfer letter or letter of consent. So the mortgagee should be sought and his consent obtained and his agreement to do all those things realized. Those are the main difference between when you are buying from mortgagor or mortgagee. Apart from that, all other conditions remain the same. Okay? All right, sir.
So, moving on. So, I know that there are documents that would be obtained. So, please, can you just give us...
Yes, in this case, just as we have emphasized before, in this case, it's a little lighter if the mortgagor agrees to the transaction.
Okay.
Yeah, and in terms of document, in all transaction, all land transaction, of course, there will be deed. The first one is that deed of assignment.
Okay.
Right? The second one is that because that deed of assignment must pass through processing of governor's consent, and each state or ministries have their own transfer process. Okay. So there is either transfer form, like Form 1C in Lagos, or transfer form in Ogun, or a transfer letter. I think in Ilorin or where is it Ilorin or Akwa Ibom, collect transfer letter, or letter of consent to transfer, as in the case of federal lands, federal lands ministry, or in the case of I think Aegis 2, Aegis 2 collects letter of consent to transfer. So that is another important letter, because if it's not there, after consummating the transaction, the buyer will be at the mercy of the seller, looking for him to now issue or sign that kind of form. Otherwise, it will not be easy for the buyer to obtain governor's consent such that he can get the deed registered and become a registered proprietor of the title. Then, as I've always been emphasizing, I've always been saying that it is equally important that the approval, the building plan approval of the property is collected. It's very important because as at the time the buyer wants to do anything, there will be need for one approval or the other, even if it's renovation permit. They will ask for the approved building plan in respect of. So in this case, even though the property is under mortgage, it's an equitable mortgage, not yet a legal mortgage.
Yes.
Issue of deed of release will not be necessary.
Okay.
Even when buying from the mortgagor. Don't forget that when buying from the mortgagor, it's only that it's the mortgagor that will initiate the transaction.
That's correct, yes.
But effective transaction or conclusion of that transaction and transfer of interest will be done by the mortgagee.
That's correct.
Sorry, by the mortgage. No, I'm talking of when buying from the mortgagee now.
Okay.
When buying from the mortgagee will initiate it. What's the bank?
Okay.
You can only initiate it, create the transaction conditions, and he has to bring in the mortgagor.
Yeah.
So eventually, even if the mortgagee is the one selling, putting his face to sell, he cannot have effective sales or transfer of right in land without the consent of the mortgagor, involvement of the mortgagor, and signing of the transaction documents or transfer documents, form of deed of assignment or what have you, by the mortgagor. The mortgagor will have to do all those things. So in the eyes of the law, the implication is that it's as if the property has not been mortgaged at all. So it does not require deed of release, even if it's the mortgagee that has initiated the transaction, because legal mortgage has not reflected, has not been done against the title with government. So in government covers, there won't be evidence of that deed, that mortgage at all. So long the bank releases the original documents and all other documents of title, and the mortgagor executes deed of transfer in terms of deed of assignment or sublease, and all other related documents, the buyer is safe to go and transact by obtaining governor's consent, get the title registered in his name, and he becomes a registered proprietor. And this type of transaction, of course, will be safer, where either when mortgagor is selling or when mortgagee is selling under equitable mortgage, in that transaction right from the beginning, the mortgagor must be involved. So long as he's involved and he has signed off, he cannot more go to court. So the challenge is around buying mortgage property in terms of having to go to court, and maybe it can be voided and what have you, will not be experienced there. It should not be the case when buying property under equitable mortgage, either from mortgagee or from mortgagor, because in either way, the mortgagor will be involved. It will participate. Right? It will participate. However, that attracts an aspect of risk. And that is the fact that ordinarily the mortgagor will want to optimize whatever price he will sell, or he will agree that the property be sold for. You want to optimize it. So if the buyer would have enjoyed a premium of certain amounts, the mortgagor can choose to say, no, that price is too low, because the bank needs him to sign. I know that price is too low unless he can pay this so much. So it might want to, say, instead of collecting how much, no, I have one or two people that will pay this so much. Hence, let's wait for them. And so on and so forth like that. And unless it's becoming too dragging, then the bank can now choose to say they might want to go and perfect their rights with government. That's another issue that we should pay attention to. In event the mortgagor chooses to disagree. We are mortgagee want to sell. The mortgagor chooses to disagree. That is not consenting.
That's correct.
Then the bank or the mortgagee has the option to now go and file their deed, their mortgage, with government's registry, the land registry, go obtain consent on it, and with that they can now exercise the power that the deed has vested in them. And they will now do that without the involvement of the mortgagor.
Okay. Thank you. This has been, like I would call it, this has been a very wonderful series on the issue of buying mortgage properties. So much has been said. So on the final notes, generally on everything we've talked about buying mortgage properties, what would be your final summation, sir?
I would say that mortgage market offers good opportunities for investors, particularly to look into buying mortgage property investment opportunities in mortgage markets is not limited to buying mortgage property. There are equally opportunities of, going into buying mortgage-backed security.
Okay.
Where you buy off the primary mortgage that has been created in the primary mortgage market.
Okay.
And that will now be a transaction in secondary mortgage market.
Okay.
And you buy that as investor. But for the purpose of what we have been discussing so far, we have been looking at the opportunities in mortgaged properties that investors can take advantage of. So that offers good opportunity for investor, particularly to enjoy what we call immediate capital gain, which is a premium. Because as a matter of fact, if you want to sell at distress, not having the privilege of allowing reasonable time on market, then there must be premium. There must be discounts to allow for immediate sales, to attract immediate transaction, to attract and motivate buyer to want to pay without any delay. And that will reduce the implication of illiquidity that the property will suffer while in the market. So, and also when they are buying such, investors will feel that, well, they are equally getting exposed to some risk. So my advice is that, I have experienced it, investing for people. I can tell you, it can be very, very rewarding. If all these processes that we have advised, we have discussed so far, are followed diligently, it can be very, very rewarding. You can buy and go and sleep. Even if the mortgagor chooses to go to court in an event that a mortgagee has sold under a legal mortgage. Thank you.
So I have a question, sir. Is it advisable to buy at market price? That's when you're buying mortgage property now. Mortgage value when buying from a mortgagee?
Okay, thank you. When you say is it advisable, I will say no. In either way, whether market price or mortgage value. The reason is this. When mortgage transaction is done, the advice of value given to mortgagee is usually under mortgage value, which is analogous to market value, or what we call forced sales value. Where the mortgagee is selling under limited time constraint. He's a motivated seller. He wants to quickly recoup his money. Right? That is a distress sales. With a distress sales, can you expect to be able to optimize the performance of that property and realize the mortgage value, which is analogous to market value, or a surrogate to market price? No. The answer is no. So in terms of being advisable to me as professional that represent investors to buy such property, or even as an investor in my own capacity, I won't pay market price. I will equally not be looking at paying mortgage value, the market value of the property. I want to enjoy, I want to have a deal. It's a deal. I want to enjoy premium. That's why I want to commit my capital into it. So I would rather be measuring with the forces value. I even see if I can beat it a little lower than forces value. That's, of course, because the lesser it is, the better for me. Well, of course, on the other side, the mortgagee might want to optimize, say, oh, no, we cannot sell below forces value. Or that we are targeting our market value, which is mortgage value. They might want to do that. But as buyer or a professional representing buyer, I want to kill the price. I want to ensure we enjoy reasonable discounts so that we can say, yeah, wow, we have had a good deal. Right?
True.
So the advisability there for me is no. It's not advisable. I would rather kill the price, the lesser. And don't forget that there is no adequacy of compensation. It only has to be sufficient. So if the property will worth 1 billion naira, first sales value say they have put it at, depending, maybe at 800, 900, 600, whatever they have put it. And I've assessed it and I say that, well, with a discount of about 20% off, I'm good to go. I can start my negotiation with a discount of about 40% off. So I'll start my negotiation from 600 million against 1 billion worth asset. And it's a deal. I was at a conference somewhere and I think it has to do with AMCOM. And I had the then MD talking about anybody that comes to AMCOM, of course, is natural that anybody that wants to buy tricycle set from AMCOM is looking for a deal, isn't it?
That's correct.
Just in the same way, you want to buy property from a bank in a distress state, or that property is already transferred to debt recovery agencies of the bank. You want to go and buy and have a deal. That's the motivation there.
That's true.
Okay. So if it's not there, then why do I have to go and lock myself into buying mortgage property? I can equally go to open market and buy whatever I want to buy and have a seamless transaction. Thank you.
All right, sir. Thank you, sir, very much. So we have come to the end of another episode of Real Estate Chat with ESV Olalekan Aboderin. I look forward to seeing you again during the next episode. Stay safe. Bye-bye from me.